Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, October 31st, 2023. It is 12:50 Eastern Time as I'm starting the video. So we typically see things slow down a lot of times around lunchtime, and then the traders get back, and we could see things move this afternoon. Markets have been mostly flattish today. A little positive, a little negative. Right now, you can see up here in the upper right-hand corner, we're slightly positive, 0.07% on QQQ. But let me just do a quick update on the markets and everything else. Not everything, but some of the things I'm watching. All right, so remember, we hit T2 recently. I'm talking about from all the way back here. Sell signals starting back there. Multiple sell signals. T1 hit right here. That was a key support level. It was taken out. Once we finally took it out on a daily closing basis, which was right here, it was a quick move down to my second price target right here. I know this is hard to kind of see here. That's 347, and we're bouncing from there. We had a brief intraday overshoot, or single day. We did close below, put in that divergent low there, and particularly on this 60-minute chart. So what we're doing right now, and this is why I want to do the update, we're pushing at this downtrend line right here, comes off these recent highs here from mid-October. And so still favoring more upside this week. And that gives us really just a couple days. We have the FOMC announcement tomorrow at 2 p.m. I think the market will drift higher into and probably beyond that. It is almost a near certainty that the Fed will not raise rates, and in my opinion, they're done. That's it. And the next move we'll see from the Fed at some point, probably in 2024, would be a rate cut. And again, that's my guess. So I'm still. I think it's a decent time, pretty good time actually, to buy bonds, longer term bonds. I think those rates are going to come down. But let me get into the stock market. I'm kind of getting ahead of myself. I'll get to bonds in a second. So that's it. You have the downtrend line right there, drop down to a 60. I have a couple different boards, but this is it. 60-minute chart. Let me go to a 5. I have a 5 and a 15 I've been working off of. The 5 shows this minor downtrend line right here. I showed you that the other day. We have a comparable one right now. We're testing on QQQ. I'm sorry, NQ. This is QQQ. Excuse me. NQ are the futures. So there's downtrend line 1, and this is downtrend line 2, which when this one gets taken out, and you also have pretty decent horizontal support right here, or horizontal resistance, I should say, at about 351-ish. So you can see we've had a couple reversals just shy. I always say if you're targeting a resistance level to take profits, whether you're an active trader or a regular swing trader, you always want to sell a little bit below that actual resistance level in case the sellers step in early. But that's it. So we've had several runs at it. Again, you can see reactions from above. And once we broke it, reactions from below. And then the downtrend line comes in. So all this together, this whole area collectively, is pretty significant resistance. In the very near term, again, just for the last few days here, we're in a near-term uptrend, as I've mentioned, working our way higher, and I expect this to pop. And then, again, this is kind of a busy board. I have a lot of levels here, but this is more of a resistance zone. And so that's your next target-ish area up there. Let me just tell you, quantify it. Be about a 1.5% move up to that next area there. Max target before the Fed and Apple, by the way, and we've got a slew of economic data. We have a couple, I think, unemployment, some numbers coming out tomorrow as well as Friday. You've got the Fed tomorrow at 2 p.m. Again, we know what they're going to do. It's more about what they say and then most about what the market does, how the market reacts. That's the most important thing. And then Apple on Thursday after the close. So quite the week. And this is that 5-minute chart. Nope, 15-minute chart. Again, you can see that resistance level right there, about 351 in the downtrend line. And that's it. So just kind of give you an idea of levels to watch here for QQQ. The NASDAQ 100, this is my 15-minute chart. Let me pull it back just a hair so you can see that downtrend line. So there's that downtrend line that I gave you this yesterday or the day before or both. It's right there, and you have this little uptrend line now forming. So you have a little triangle. And again, I've been pretty clear, and I still favor an upside pop. You also have, see the comparable price resistance on NQ in the downtrend line. We're right at the downtrend line now on NQ. Remember, I showed it to you a minute ago on QQQ, and we're a little below it. So I think the futures traders, like myself, they're going to see this pop and they're going to buy it up. And when they buy the NQ futures, it's going to also translate into buying of QQQ. That's a little pop up to there, 14, little over 14,500. I have it about 14,510 first resistance, and then pretty clear up there. If they can pop that, it should carry up here. This is more of a resistance zone I have, and that runs from about 14,960 up to about 14,710 or so. Again, that's kind of defined by all these levels here in close proximity. Okay, so that is that. Oh, and as I like to say, I'll always give you my thoughts on where things are going. I'll let you know if I have a decent opinion or not. And then most importantly, resistance is resistance until and unless taken out. So that's it. As I do this video, we are at resistance. I do favor a breakout. And so the difference is, it's one thing to recognize support and resistance. Okay, you can pretty much anybody can do that. And, we all have different, skill sets, and we see things different lines. But the important thing is, when you see a pattern like this, do you believe this will break to the upside or downside? Now, you can have no opinion if you want, but if you do think that it's going down, then as a near-term bear, you want to short here. You short resistance, and then you could add to a short on the breakdown there. I think it's going to break, so I'm already long and wait to see that breakout. I have my share right now. If I didn't have anything, I'd just wait for the breakout and then buy. But again, there's not a lot of room between the breakout and the next resistance level, so maybe a breakout back test like that. I wouldn't be surprised if we blast on through 14.5 on NQ. But I think at least a minor reaction in there. So let me move on. Let me get the rest out to you guys. So on that's NQ and let me show you also the NQ 60-minute chart. This is kind of bigger picture. That 15-minute chart and those 5-minute charts, the QQQ I was just showing you, that's more micro levels. Here's that secondary downtrend line I gave you a minute ago on QQQ. That's kind of where we're at now with price resistance. But you can see the next there's the next decent resistance here on this more significant 60-minute chart. See, it says hourly right here, so that tells you I'm using 60-minute candles. And that's about 14,573. After that, my next resistance I have on the 60 is at about 14,972. So when I go down to the smaller frames, like the 5-minute and 15-minute, I'm going to have more what I call micro levels. But this is more of this is, I always say, my go-to swing traders time frame, the 60-minute chart, where if you're not interested in trying to game all the little minor, what I call squiggles, little pullbacks, 0.5% here, 0.75%, even 0.25%, which is worth it as an active trader if you're trading leveraged and you're using, futures or a large amount of QQQ. All right, there's that uptrend line I gave you, and that kind of gives you the triangle, and this gives you what I think is going to happen between now and Thursday's close. So if I had to make a micro guess, this is very much a micro call. I don't know if anybody does what I do, trying to be so specific on time. I think the drift will continue to be higher, as I've maintained for the last couple of days, into and through the Fed meeting into sometimes Thursday. So but again, there's a lot of ifs there. So let's just say we rally before then, hit some targets, we may pull back. But I think if we're rallying into Thursday and we get to some decent resistance levels and we're up, let's say right here or even up here, somewhere higher, that would be a good place to book profits and maybe either go to cash and wait for Apple to report, see how it does, or, again, I'm getting 3-4 steps ahead of myself. We've got a lot of economic data and the Fed between now and Thursday night when Apple reports, and then again some economic employment numbers on Friday morning. So there's a whole lot in front of us. So volatility is continued to be will be like, oh, let me do an update on there. I'm rambling. I haven't updated you on the VIX. Twice we've hit T2, and obviously if it goes without saying, it shouldn't, but in case it does. In case it doesn't go without saying, to be bullish, even if it's near-term bullish on the market, is to be bearish on the VIX. So you've had two opportunities. We hit my second target on VIX, which I already highlighted back here. We hit it again just recently. You can see the negative divergence. And so again, if you didn't take profits, you've had two opportunities to take profits at T2, just like you did at T1. And again, that's why I list multiple targets. We were longs right here. We were long right here. This is where we went long. I put this as an official trade idea. VXX. Hit T1. We had negative divergence then. That was a great opportunity to either short, reverse it, profit on the pullback, or sidestep to get back on longs, recycle back in. That was a 12% pullback. So, this is what an active trader can do. You make the 20% on the first pop, short it, turn around, make another 10+%, get back in on the pullback, rally up to T2, because once the first target's hit, that usually opens the door for the second target to be hit, which we did. And then again, another pullback, you had a second opportunity, and we're pulling back. And again, because I'm, leaning towards more upside, I've been and still am short the VIX, but we're coming up in resistance now. I did just right before the video, I actually took out about half the position out of my trading account, only because that NQ is at that resistance level. And I'm also kind of positioning into other things. I mentioned earlier today, I shorted OJ futures, thanks to Jay McCallum on the site, who pointed those out about a month ago. I'll get to that in a second for any of you interested in that kind of thing. Unfortunately, there's no ETFs or ETNs. That's why I didn't make it a homepage post. But I just want to say that. So, something like this, pull back. I don't know how far. And again, I'm don't get me wrong, I'm still cautiously bullish. At most back to here. I'm still maintaining these targets as of now. I'm just, currently not in the position, nor would I add to it right now, because I think, again, the market's going to drift higher for the next couple of days, and therefore the VIX should continue to drift lower. So I'll update that later. Just want to kind of mention two opportunities to get out at T2 so far. All right, SPY, the S&P 500. Remember, NASDAQ's not everything. It is usually my go-to trading proxy for the indexes. Sometimes small caps, and even sometimes the S&P 500 if I think there's more juice, because something going on with the financials, which don't, the QQQs don't have any financials. But you have at the 60-minute chart, nice big, divergent low. And you know me, I've been singing the bear song for quite a while, and maintaining a bearish bias, and I'm still think we're going a whole lot lower in this market. I'm just trying to thread the needle here, as I said the other day when I covered my shorts and reversed along. This is SPY, and again, the technical show, we've broken out. You had a pretty clean downtrend line there. 60-minute, that's what that is, 60-minute bullish falling wedge. I think we're going to continue to see stocks lifted with all those big market leading tech stocks that I just showed you in the last few days here, including the end of last week, hitting key support levels, 200-day moving averages. So yes, the macro looks ugly right now, but the technicals for near term, too many big stocks at support, down quite a bit, and then positive divergences, and the long-awaited pause from the Fed, which they've been talking about for a long time, and it's finally here. And so that'll be official tomorrow. But I really, I think those in the know the Fed doesn't do surprises, so no change in rates is what we're going to get. All right, so there's your next resistance in SPY, and try to quantify it here. It roughly coincides with the QQQ and NQ that I just gave you, about 0.8% upside to the next resistance level. Pretty good resistance, about 420.33 right there. Then you have about 424.46 and about 431. So just some near-term targets. And if we got there pre-Apple, maybe even pre-Fed, that'd be another 3.5% rally. That would be, I think, that'd be a very objective place to take profits. It'd also be, let's see if it's a measured target for the wedge. When you see a bullish falling wedge like this is, you take the widest part of the wedge, which I just did here, and you add that to where the wedge breaks out, and that gives you a measured target, and that comes in roughly there, really right here, about that, in between this 431 and that 438 or so right there. So that's let's just say a target zone that if we got there this week, I think that'd be a excellent place to book profits, quick alongside trade, and maybe even get back in short. I will give you my thoughts if and when we get there. Again, I would like to speak 3-4 steps ahead. We haven't even gotten there yet. And in fact, as I just showed you a second ago, NQ hasn't even broken out of this near-term downtrend line. But hopefully we'll get that today, I think, and pop here and get that little lift up to about 1405, 14,510 or so before the close. Okay, and let's not forget about the big market-leading FANG stocks, or now known as the Magnificent Seven. The old FANG acronym is kind of antiquated now. And you have Apple on the daily, one of the few stocks, probably the best looking on the daily chart. And so, be aware. I often say stocks that have a clearly bullish or clearly bearish technical pattern heading in earnings, that's usually the way it goes. So Apple could pop. And if it does, where to? Well, this downtrend line, the bear market downtrend line, looks like a magnet. If it does, that's going to firm up this divergence, and you could even see more upside. Now, we're in a downtrend where I still believe we're in a bear market. That will only be definitive in hindsight right now. In other words, I'm maintaining that the rally into the July highs in the stock market was a bear market rally. You can debate that all day long. It won't be. You can never say it definitively until we go down and we, take out the old lows and extend the bear market that began back in November of 2021. So, again, that's just my view. But where I'm going with, if it is, then what bear markets do. They're very, very cruel to. I'll not even say the word bulls. I'll say let's say permabulls, or those that I like to say are not flexible traders like myself. I can wear a bull hat, a bear hat. Doesn't matter to me. Anyways, what would you have to recognize is what kind of market you're in. And my point being that bullish chart patterns either don't materialize at all and just fail. You see a bullish falling wedge ready to break out, or they break out and just as they start to look good, you see volume coming in, the breakout looks great, and but well before it hits its measured target, all of a sudden the sellers step in and the breakout fails. That is a signature trait of a bear market. So again, just something to watch for, guys. Maybe maybe we do break out. Maybe the breakout sticks. Maybe we even take out the downtrend line. If so, you don't want to be short if Apple's going to do that, and then especially that. So again, not a time, as I've been clearly saying about for the past, since late last week, not a time to be aggressively long or aggressively short. And where my bias has been near term, which is to the long side lately, and still is as of now. So there's Apple. That's the daily. Here's our 60. Look at Apple, ready, primed. This is 60-minute, right on that downtrend line, and has a little price resistance here, ready to pop. I think we'll get a pre-earnings rally, is my guess. Positive divergence on the 60. There's a lot to like right now on the chart of Apple. Microsoft already broke out. I'm not going to do each and every one, but there's its downtrend primary bear market downtrend line breakout back test, and so far still above it, so you can't really knock that one. It is below that 341 resistance. Alphabet still holding that 200-day right here, the red line, 200-day exponential moving average. It just tested for 2 days, and the big support zone right there, and still above it. So again, you can't write these stocks off until they take out. Remember, that should have been the second purple line, and if I didn't cover it when I was back there, Apple hit perfectly that purple line I gave you that it needs to take out to really open the door to more selling. And the purple line wasn't just a random purple line. Like I say, it's support. So far, this is a successful defensive support. So my near-term bullish bias switches to a bearish bias if I see Apple break that purple line, Microsoft break that purple line, Alphabet break what should be purple there, Amazon break the purple lines, which are the uptrend line, and but it didn't. Amazon went on to break out upside the triangle pattern. So I think a lot of folks got bearish lately. I talk about that a lot. I call them JCL or Johnny Come Lately shorts and bears, that they didn't want to short up here, and we had a lot of evidence, divergent highs and breakdowns. They didn't even want to short on the back test here, that last golden short I gave you right here on the kickback to the primary trend line in QQQ, which would have gave you a quick, just on the Qs, 8.5%, but they wanted to short here the other day. And so you got to get out of that mindset and don't do the opposite of what you think you should do just for the sake of being contrarian, but just realize that Again, we could turn around and dump tomorrow, dump before the Fed and after. But, when you're down as much as you are and you're at support and the 200-day and all these market leading stocks are also successfully testing and then defending support, you just can't get too bearish no matter how bearish the folks in the media start to get after a 8.5% drop in the NASDAQ. And I think it was a 10% in the S&P, if I'm not mistaken. I think I saw something about the official antiquated definition of a correction, 10%, and they still use the antiquated definition of a 20% drop being a bear market. But NVIDIA holding that first purple line I gave you, 403.30, with the secondary line right here, the uptrend line, and the 375 level. So another one had support. Again, big divergent high. If you ask me where this stock will be in 6 months, is it going to be up there or down here? I'm going to say somewhere down here. But in the very near term, it's got to take out this level right here, all these intersecting purple lines, and the 200 days and everything just below it. Meta kind of hanging in there like everything else. Let's see if this chart loads. There it is, still above the purple line. Tesla already cracked, but it's at this. I had it blue here, 198, and so that's that. All right, let's not beat a dead horse. There they are. And again, a lot of these guys have divergences on the 60, or not all of them, but quite a few of them did. And NVIDIA even has divergence here on the 60. All right, let's change gears. So that's that. We'll see what happens. But most importantly, remember, right now, as I do this video, we're pushing on the NQ, on that downtrend line right here, that near-term downtrend line on the 5-minute chart, and then QQQ is it's a little bit above that comparable trend line, and also 351. So you want to play it safe. If 351 on QQQ gets taken out with conviction, we've had enough consolidation under there that I think we can pop it and run soon, but we got to do it. Obviously, again, we're still under the resistance level, and so that's that. Let me move on to the next thing. All right, so I updated you with gold today. That one was thrown out. It might have been in a comment section. I can't remember where I posted that yesterday. Either somebody asked or I put it up, or no, I didn't cover it in a video because I had a static chart. Anyways, that's that sell signal triggered, and I gave you the first target today on that chart. I got out to a 184.19. So that's, it's not even a target. I would call this S1. It's too small of a drop to bother covering. It's support, and then when that gets taken out, whether we bounce first or not, that'll open the door down here to the next targets. And as I said in there, to be short gold is to be short silver. You're just going to get more on silver. So I always look at it this way. It's just like trading the stock market. I always say this over and over, that 99 times out of 100 in a trend, the NASDAQ 100 is going to go up more in a bull trend than the S&P, and down more in a bear trend, because it's just more concentrated with higher growth, a bigger concentration, bigger weighting of high growth companies, big tech companies. Here's an alert on my OJ trade. I'll get to that in 1 second. Let me cancel that. Okay, sorry about that. I had to cancel that price alert. Okay, so my point was, yes, you're either going to be right or wrong in the markets. We all know that the stock market, the different indexes, especially the large caps, S&P 500 and NASDAQ, go up and down together. But the NASDAQ has a higher beta to it. It's going to go up more in percentage terms and down more during a downtrend. And so if I'm going to either be right or wrong, I want to get paid for it. So that's why I trade the NASDAQ typically over the S&P. And likewise with gold and silver. Silver tends to move in the same direction as gold, as does GDX, the gold miners ETF. So you can go long or short gold, and today you're down 0.33%. Or if you're short silver, your short is down or positive by 1.78, and that's the additional juice or beta, if you will. And then GDX miners 2.12. Okay, so that's why I use gold as really the proxy. You're going to get the charts on gold and silver, and you're going to see the same thing. These guys mirror each other. There's GDX. Actually, it got ahead of it. So it kind of anticipated the breakdown. Look at that. There was the wedge right there. But either way, it's falling more than gold, and so that's that. So not much else to add. I see more downside to go in gold, silver, and the miners. They just broke down. And then let me go to that OJ trade, because that just popped right here. Let me put this down over here. See if I can get this chart centered in here. So, as I said about a month ago in the comment section, somebody said, "Hey, look at OJ's looking like a short," and I said, "Not for me. Not I couldn't make a case to short it just because something's going up." I've been watching, holding back, and that little voice in my head that said you want to short it, but it's just because it had gone parabolic. I gave you that chart earlier. That's a definite. This is a textbook parabolic uptrend. You can see the uptrend line. That's a parabola. Parabola has an increasing slope, clean one too, and so traded. And then this is a regular, trend line. This is what most uptrends look like. You can draw a clean uptrend line, something like that, or a downtrend line. And so, well, let me show you why I shorted it this morning. So right here, I've been watching it every day, just waiting for something and not knowing what that something would be, but typically in a parabolic uptrend, and let me be very clear on this, you don't short a parabolic uptrend just because you recognize it and you know it's going to eventually crack. You can get wiped out. The dot-com bubble taught a lot of people that. I'm sure Bitcoin taught a lot of people that before the bubble popped. This is one of those. So what you look for, this is a buying climax. This is the biggest volume spike, and this is a 5-minute chart that I can roll back to. I don't see anything. I think you can see it in the video. This is a volume. Here, I'll box it in right here. Is a massive volume bar on a spike up this morning, and that is indicative of what we call buying climax. And as the name implies, that's it. Climax means the end of something. So I took a shot at it, and then we started to reverse and took another shot at it. And as I said, now we have, and so now this is the opening. So you can gap up here, right here. There's a little gap. So now we've gone negative by quite a bit. And then you look at a daily chart, and now you can see a big old bearish engulfing candle. So now, if you didn't want to take the aggressive entry this morning, this is a higher probability entry, pretty good reversal. And we're not solidly through there yet. You can play it safe. Sometimes you get these little pullbacks and you can't get too excited about them, but that's the nuance, or the art of trying to identify which one of these is not just a dip buying opportunity, but rather the start of something much more. And I kept it simple. We might not get all the way there. My target's pretty aggressive. Basically, I'm looking for a double on this, a 50% drop. So you shorted at 414 or 400, and you covered at 232. It's almost a double. Remember, shorting is buying and selling in reverse. You sell it here, and then you buy it here. You buy to cover. So that's your profit right there. What else? Well, I can, things I was worrying about. By the way, guys, I don't mention it each and every day, but those things to watch that when I was talking about on the bear side, reasons to stay short, press the shorts until recently, I watch those on the flip side. When I see kind of relief, a little abatement, bank stocks are looking okay. XLF, remember, we're pushing the red line, but XLF, this is a financial sector ETF. These are both your banks and your non-bank financials, Visa, MasterCard, Berkshire, and the likes. S&P Global's in there. There's your downtrend line. Beautiful, beautiful symmetrical triangle. There's your uptrend line. We hit uptrend line support. 1, 2, 3 clean, distinct reactions. We had positive, aka bullish divergences I highlighted on Friday, and we're moving higher. And that is because I think you're going to get a relief rally. The bank stock's gotten snot beat out of them recently, and we're finally seeing a little reprieve. And I think it's going to kind of sink. I'm surprised it hasn't sunk in yet. That hey, Fed's going to. Here's that long-awaited pause from the Fed, and can only call it a pivot in hindsight when they actually do start to cut. But again, I think odds are that the rate hikes are over. Okay, let me move on. So I'm just saying this looks good too. You can pure play. This should carry the S&P up if we do get a relief rally here in the financials. And so far, so good today. Treasury bonds, I gave you that too. I think we'll see a rally there. And they're really not running hard. I mean, we're up on the TLT. Remember, it broke out here, but not much. Again, it's a way to be diversified, and like I talked about recently, even if it just is dead money for a while, I think the RR is pretty attractive. I see minimal downside in bond prices, and they're still kicking off, roughly 5% interest on on the longer term treasuries, even the shorter term. Let me wrap it up here. Right at the 30-minute mark, get the video out to you guys. And like I said, should be, next couple days. Could be a little choppy, but I think just mostly up and, still using, you can buy the dips. If you share the same mindset, just don't fall in love with anything and recognize that we do have a lot on the economic and earnings calendar this week, really with just Apple. Everything else it really doesn't matter. We'll see what Apple does. And like I said, the chart on Apple, it's hard to knock it right now. So we could have more than just a little relief rally up into Thursday. But again, it depends what happens between now and Thursday as to if and how I'm going to position on the NASDAQ 100 heading into Apple earnings. In other words, is it worth taking a shot, a long or short? I will let you know my thoughts before Apple reports. That I promise you. All right, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.